What is the dealio, guys? Look, this video right here could potentially be the most important, most powerful video you watch all year long. All right? Because what I'm gonna do is I'm gonna break down a lot of stuff for you that could help you with not only your trading but also your mindset. All right? So I don't want to waste no time. I just want to get into it. Obviously, people are very scared right now, right? And I want to talk about ranges, but I also want to talk about a little bit of psychology, okay? So in the book, one of the best, most recommended trading books is called Trading in the Zone, right? One of the things he talks about is it's human nature to want to run away from discomfort, all right? So when we're talking about trading, trading can be a very uncomfortable thing when you are losing money or you could be down in your play, whatever, right? But if you never learn how to handle yourself through discomfort, you will never, ever, ever be great at trading or anything in your life. So the person that you become is predicated on how you handle yourself in discomfort. If you run away from discomfort every single time, you will not be successful long term. Okay? Why am I saying this? Because every single play, whether it's a scalp, a day trade, a swing trade, every play is different. All right? When you change the lenses of how you're looking at the world, the things you are looking at are going to change. Right? You cannot approach every single play the exact same way. If you approach every play the same way, you're not going to get where you want to get because the market is going to throw curveballs all the time. And so you have to understand how to adjust and how to adapt. Every day is not the exact same. That's why some days you could make money, some days you could lose money. But when you understand the fundamentals, you will always be in a position to win, right? So I want to ask you a question. How many times have you been in a play, you got out, you took your L, right? You lost your money, and then the next day or an hour later, the play goes into the direction and you could have been up $500, $1,000, whatever. That has happened to me a lot of times in the beginning days, right? What I learned was, it's not that I was wrong, I was just impatient. And I was impatient simply because of the discomfort I was feeling, right? The discomfort I was feeling was way, way, way too much, right? And I ran away from the discomfort. And that is why I ended up getting out prematurely, okay? Sometimes your discomfort that you're running away from, it could keep you safe and it could save you, right? But I have left a lot of money on the table by simply getting out of plays too early. And the reason I got out of them too early is because I panicked, right? Right now, the market is making a lot of people panic. Understand what I'm saying? The market is making a lot of people panic, right? You got to stay calm. You got to stay composed at all times, no matter what. And you got to be patient. All right. So I'm going to talk about ranges. Every single stock, every single day, every single week, really weekly, stocks have something called ranges, right? And what this means is it has a peak and it has a bottom, a peak and a valley, however you want to look at it, right? If a stock goes up to the peak and you don't know what the valley is yet, then you just let it come down to the valley and then you find it. And then that is now your range and you can trade within that range, right? Now, what happens if you get in the middle and then the stock comes down to, let's say you get in the middle and the stock comes down to the bottom? What do? Do you get out? Right? One thing I've learned is when you're trading, if the stock is at the bottom of the range, but it didn't break below the range, it could still come back to the upside, right? And so in the charts, I'm gonna go in the charts and I'm gonna show you what I mean about these ranges, and it's gonna change your life. All right. Now, there's something called dollar cost averaging. It doesn't matter you have equities and shares, or if you have if you're in options. If you get in a play, if you buy shares, or if you get in a call or a put, if the stock goes the opposite way of the direction that you want the stock to go in, and it's still within the range, you can do something called dollar cost averaging. And essentially what that is it's going to bring down your cost. So now the stock does not have to go back into as far as it had to in the beginning, simply because you average down your cost. So let's say I got in an option call, and let's say I got 10 contracts, and each contract cost me $100. That's $1,000, right? Now, if the stock comes down, and now let's say my contracts are only worth $50 each, that means that I'm down 50%, right? So what I can do is I can buy, let's say 5 contracts at the $50, and now my average cost for my whole contract is now maybe $75 instead of $100, because I brought it down, I averaged down. And now, in order for me to get to a profit, I don't have to go as high with the stock price that I used to, right? So understand the power of that when we're talking about trading options, okay? Am I saying stay in plays forever just because? No. But what I am saying is you need to understand the ranges. When you understand the ranges, then you'll know if you should stay in or if you should get out. Then you'll know if you should add into your play or if you should get out. All right, so let's go to the charts, and I'm going to show you what I mean by these ranges. All right. So right here is the SPY, but it really doesn't matter the stock, right? Let's just go to see who's been in a groove. Let's go to AVGO. All right. So we're going to go to AVGO, and we're going to go to a 30-minute time frame. All right. Now, let's look at last Monday. Let's look at last week, okay? So AVGO opened here, all right, at 204, and at the end of the day, it closed at 184, okay? So look, we're going to type in 184, all right? And then we're going to type in 204. Boom. All right. Now, the next day, look at what happened. It came a little below 184 at 180. And then look where it went up to. It went up to 193, right? The next day, okay, so here's what I'm going to do. This day, we got 180, and I'm just doing round numbers. 180, and then we got 193. 193. Boom, okay. Now, this day, you see that the range got tighter, but it stayed within the range. And it's been within this range right here. All right? Give or take a couple dollars between Monday and Tuesday. The next day, stayed right here. Okay? So it was in a smaller range. The next day, what's this number? 177. So we got 177. All right? And then its peak for the day was only 186. All right? 186. Boom. All right. And then it had earnings and it gapped up. But it gapped up. But look where it came. It came right back down to the same range. So this right here is 181. Whoa. Look what's going on. It's still in this range right here, right? 181. 181. And then at the peak for the day, we're at 195. 195. All right. Boom. And this was on Friday. So it stayed in a range this whole week. You get what I'm saying? So all you have to do is trade in the ranges. So if, let's say you get into a call right here and it comes down, right? What you can do is, as long as it stays above this support level right here, you can literally buy maybe one or two more contracts because you know it's going to come and try to retest higher, but the stock doesn't have to go as high as it initially had to go for you to make your profits. Does that make sense? So this is what we call a range. This is what we call a range. Okay? Look at how it's just outlined. This is like training wheels for trading. All right? What's another stock? It doesn't matter what the stock is, y'all. I want you guys to understand, don't freak out. Right? Do not freak out. Let's go look at Target, Nvidia. Let's just say Microsoft. Microsoft has been coming down, obviously quite a lot. But let's go to last week. We'll do the same thing. It's Thursday, Tuesday, all right, Monday. All right. So what I'm going to do is I'm going to put this right there. And this was on Friday. Okay. And then this right here. This is Monday, Friday. It's Monday right here. All right. So I'm going to put this right here. Okay. Now, so last week, Microsoft's whole range was, what's this price? 402. 402. Okay. And this price is 380. 380. So this is Microsoft range for last week. Weekly range. 380. 402. All right. Now, all you have to do is on Monday, see what the top and what the bottom are. All right. After that, you could say, all right, now that I see what the range is, when it comes down to the bottom of the range, but you see how this day it came down right here, but then this day, this was the bottom for the week. And then it bounced off of this and it goes up. So whenever you have the bottom of a range on a week and it starts to bounce up, then it's going to go and try to test its peak that it previously had. So this is on Tuesday. So it tried to come up right here, which is a resistance level, and it tried to touch right here, which is the peak for the week, right? But the next day, it ended up breaking past that, and then it came up right here. And as you can see, we hit the top of a range, right? And then it started to come down. You get what I'm saying? So this is the weekly range for Microsoft. It does not matter what the stock is. Every stock has a weekly range. And on Monday/Tuesday, you'll be able to understand where that range is at. Right? So if you get in a play in the beginning of the week and you're down on it, it does not mean that you're going to lose out on it. Right? Sometimes you don't need to be panicking to sell. You need to understand the range. Okay? This is very, very important, and it's very, very powerful, and it's very critical that you understand what's being said right now. Okay? So please do not get scared and be all worried. Right? Understand what dollar cost averaging is and understand what the ranges are. Some days are going to be down, right? But when things are down forever, or it seems like they're down all day, does not mean that they're going to be down forever. It just means that it could wait until the next day to bounce off of the range. You see I bounced off of here over here. All right. So that's what I'm talking about when I'm saying ranges. All right. Every single stock has a weekly range. On Monday, you will only know the support and the resistance for that day. But as the week plays out, you'll be able to know and understand the actual ranges. So if you see that last week the range was from $50 to $60, and then at the top of the week, the top of the next week, the stock opens up at $61. Now we're going into a new range, and you're going to be trading between 60 and let's just say 70, right? Let's say that we're at the bottom of the range. Okay. If you know that the previous top of the range is at, let's say the bottom of the range is at 40, and you know that the top of the range is at 52, and right now we're at 40, even if we break a little bit, let's say we're at 38, we know that, okay, it should be bouncing off. Even if it gets to 48, we'll still be able to be in profit on our play and we could cash out. All right. So I really want you to understand that, like, don't panic. You got to be calm and poised at all times. You have to be. All right. Trading is a long-term game. I always say, get rich over time, not overnight. You can definitely get rich, but it's not going to come on one play. You're going to take losses, and that's why it's so important to take responsibility for all of your actions. You will take losses, and that's perfectly fine. As time goes on, you're going to take less and less losses because you're going to get smarter. And I always say the more you study, the less you worry. All right? So I hope that this was helpful. I really, really, really hope it was helpful. I feel like this was a very powerful video for you to understand. Yes, it's support and resistance, but it's ranges, right? Support and resistance is one thing, but when you look at it from a different lens, that is what could change your life, right? Because ranges is nothing but support and resistance. But a lot of times people are looking at things from a 2-minute time frame perspective. You got to be able to look at things from a daily perspective, from an hourly perspective, from a 4-hour perspective, right? You got to be able to put on all these different lenses on a consistent basis so that you can get better as a trader. All right. So like I always say, make sure you get out of your head and go get into this world, because your head is a dangerous place to live. All right. I hope you guys have a great day. I'm going to see you guys tomorrow. Peace.